In this video, I'm breaking down long-term investing versus trading on interactive brokers and which one actually makes more sense for your budget. Because on IBKR, the real question isn't which strategy sounds better in theory, it's which one you can stick with without stress, burnout, or slow money leaks you don't notice until later. IBKR is a powerful but very neutral platform. It won't stop you from overtrading, it won't warn you when costs add up, and it definitely won't protect you from yourself. So I'll walk you through how trading and long-term investing really play out on IBKR using real pages from the platform so you can see how each approach affects your money in real life. I'm Erin from Your Money Friend. Let's get into it. Why IBKR makes this decision harder than other platforms. Before we compare trading and long-term investing, you need to understand one thing about IBKR. This platform is not opinionated. It doesn't punish you towards long-term investing, and it doesn't discourage trading. It gives you access, tools, and efficiency, and then it steps back. That's very different from beginner apps that nudge you, gamify things, or limit features. On IBKR, both paths are wide open, and that's why budget mistakes happen quietly here. If you don't decide how you're using IBKR ahead of time, the platform will happily support whatever behavior you bring into it. So let's look at how each approach actually plays out. Go ahead and click the link down below so you're looking at the same page I am. When you land here, the first thing that jumps out is pricing. You see low commissions, in some cases $0 commissions on stocks and ETFs, and very small per share costs. Everything about this page is designed to make trading feel efficient and almost effortless. And this is where trading on IBKR starts to feel harmless. Without realizing it, your brain starts to make a quiet assumption. If trades are this cheap, then doing more of them probably isn't a big deal. It feels like every decision carries very little weight because the platform isn't charging you much to click buy or sell. But here's the part that's easy to miss. Low commissions don't mean low cost behavior. They mean low friction. IBKR removes the brakes, but it does not remove the consequences of your decisions. When you trade frequently, even on a low-cost platform, you're making more decisions, you're reacting more often, and you're second-guessing yourself more. You're changing plans halfway through instead of letting them play out, and none of that shows up as a clear fee on your statement, but it shows up over time as poor timing, stress, churn, and performance that slowly drifts downward. IBKR is incredibly efficient for traders who already have structure, rules, and discipline. But if you are newer, the platform makes it very easy to trade simply because you can, not because it actually fits your plan. From a budget perspective, this is what's important to understand. Trading on IBKR very rarely blows things up all at once. It doesn't feel dramatic, it leaks slowly and quietly, and most people don't notice until they look back and wonder where the progress went. That's why trading can feel cheap on the surface, but expensive over time if you don't bring a strong structure with you. Now let's click on pricing and click on margin rates. So now let's talk about margin because this is where a lot of budgets quietly fall apart on IBKR. If you're looking at this page with me, you'll notice something right away. Compared to other brokers, IBKR's margin rates look pretty low, and on the surface, that sounds like a good thing. It makes borrowing money feel reasonable, even responsible. But this is where people get tripped up. Low margin rates don't make margin safe, they make it easier to justify. When borrowing looks cheap, it stops feeling like borrowing and it starts to feel like a small boost or a temporary helper instead of a real obligation. This page shows how borrowing costs change based on how much you borrow, and a very common thought people have is, I'm only using a little bit, so it's probably fine, but margin doesn't care how confident you feel. It changes how your entire account behaves the moment it's turned on. Once you're using margin, interest starts accruing every day, even on days when you do nothing. If the market moves against you, you may be forced to make decisions at the worst possible time. You have less room for error, and every mistake feels heavier because it's magnified. What makes this especially hard on IBKR is that the platform doesn't slow you down. It doesn't have pop-up warnings or asks if you're sure. It assumes that if you've enabled margin, you understand exactly what you're signing up for. From a budget standpoint, margin is one of the fastest ways to turn trading into a source of anxiety. Not because the rate is high, but because the pressure is constant. You're paying interest, watching positions more closely, and feeling like you need to manage things instead of letting them breathe. That's why trading plus margin is usually the worst combination for beginners on IBKR. Not because IBKR is bad, but because it's very efficient. It gives you powerful tools without guardrails, and that efficiency can work against you if you're still building experience and discipline. The safest move early on is simple. Understand what margin is, but don't use it yet. There's really no rush. Margin will still be there later when your strategy and habits are stronger. What I do love is they go over the risks of margin trading and also how trading securities on margin works. Now let's look at the long-term investing on IBKR using the same lens. What's interesting is that long-term investing uses the exact same low-cost setup we just talked about, but in a completely different way. Instead of low commissions encouraging you to trade more, they quietly support doing less. You buy less often, you hold longer, and you avoid unnecessary churn. IBKR doesn't reward activity, it rewards not messing things up. When you invest on a simple schedule, like monthly, quarterly, or whenever new money comes in, your costs stay low and predictable. There's no pressure to constantly adjust or react. You're not paying interest, you're not watching positions every day, and you don't have that constant feeling that you should be doing something just because you logged in. From a budget perspective, this matters a lot. Your spending becomes stable because there are fewer decisions, fewer emotional moments, and fewer opportunities to accidentally create costs for yourself. You're using the platform as a place to hold assets, not a place to constantly interact with them. And this is where IBKR really shines. Even it doesn't look impressive on the surface, it's not exciting and it's not trying to be. But if your strategy is simple, the platform is very forgiving. It lets time and consistency do the work instead of asking you to manage everything all the time. And for most people, especially long-term, that's exactly what you want. Now let's click on pricing and go to interest rates. So this is another reason long-term investing tends to fit real budgets better on IBKR. On this platform, keeping some cash isn't automatically a bad thing. Depending on your balance and account size, IBKR actually pays interest on idle cash. So cash here isn't just doing nothing, it's a part of how your account stays flexible. So if you scroll down a bit, you'll see the interest rate calculator. This lets you plug in your cash balance and overall account value to estimate how much interest IBKR pays you for not being fully invested. And I like this tool because it makes something really clear. Holding cash on IBKR isn't the same as falling behind. For beginners especially, cash plays a few really important roles. It reduces the pressure to time the market perfectly. You don't feel like every dollar has to be invested immediately or you're doing something wrong. It gives you flexibility when life happens. Unexpected expenses, irregular income, or just moments where you don't want to make a rushed decision. And it lowers the urge to overtrade. When cash isn't wasted, you're less tempted to force trades just to feel productive. This is a big difference between traders and long-term investors. For traders, cash often feels uncomfortable. It feels like something that needs to be put to work right away. For long-term investors, cash is a stabilizer. It smooths out decision-making and protects your budget from emotional swings. From a budget perspective, this matters a lot because cash creates breathing room. It gives you fewer moments where you feel like you have to act just because you logged in, and on IBKR, a platform that doesn't slow you down or warn you, that breathing room is valuable. So when you see cash in a beginner portfolio here, it's not a mistake, it's intentional. It's there to support consistency, not to chase returns. Here's the honest comparison that most people don't think about when they first open IBKR. Trading usually costs your budget through frequency and pressure. You're making more decisions, reacting to movements, paying margin interest if you're using it, and spending a lot more mental energy watching and managing positions. Even when fees are low, the attention and stress adds up, and those things quietly affect how your money performs. Long-term investing costs your budget in a completely different way. It costs patience. It costs doing nothing most of the time. It means being okay with not reacting, not checking constantly, and letting time pass without feeling like you need to intervene. IBKR doesn't automatically make one option cheaper than the other. It simply makes both possible. The platform stays neutral and efficient either way. The real difference comes down to which approach fits how you actually behave. Most beginners don't lose money because fees are high. They lose money because the platform gives them the freedom to do too much. And without clear structure, that freedom turns into constant action instead of steady progress. And that's the budget trade-off most people miss. So which one is better for your budget? For most people, long-term investing is simply easier on the budget, not because it's smarter and not because trading is wrong, but because it asks less of you. Fewer decisions, fewer costs, and far less emotional energy. Trading can work, but only if you treat it like a business. That means strict rules, no casual use of margin, and a lot of discipline. Without that structure, trading usually becomes expensive in ways people don't expect. Long-term investing works for most people because it's boring on purpose. It's repeatable, it's predictable, and it doesn't demand constant attention. And on a platform like IBKR, that simplicity is a real financial advantage. If you want to explore either approach further, I've linked interactive brokers down below so you can take a look at the platform yourself. So if you're deciding between trading and long-term investing on IBKR, try to focus less on potential returns and more on what your budget can realistically handle over time. IBKR gives you a lot of power, but power without structure can get expensive. The platform won't slow you down or protect you from overdoing it, so having a clear approach matters more than the strategy itself. If this video helped you think more clearly about how to use IBKR in a way that fits you, make sure to subscribe to the channel. I'm Erin from Your Money Friend. Thank you guys so much for watching, and I'll see you in the next one.